If you are 65 or older and you own your home in Florida, I need you to stop whatever you are doing right now and watch this entire video, because there is a property tax break worth up to $50,000 that most seniors in this state are not getting. And the reason they are not getting it is not because they do not qualify. It is because nobody from the county ever told them it existed. And right now, in 2026, there is still a window open to fix that. A narrow window, but it is open. This video is going to show you exactly what that window is, how wide it is, and precisely what you do to get through it before it closes. Stay until the very end, because the fifth item I'm going to cover is the one almost nobody does, and it is the one that protects you permanently going forward. Before we go any further, hit that subscribe button right now. The rules around property tax exemptions in Florida change every single year. The income limits change, the deadlines shift, the county procedures get updated, and the state is not going to mail you a letter explaining any of that. This channel exists to make sure you know what changed before it costs you money. Subscribe so you do not miss it. Let me tell you about Dorothy. Dorothy is 74 years old. She lives in St. Petersburg. Her income is Social Security only, about $540 a month. She has owned her home for 19 years. Every August, she gets a piece of mail from the county called the trim notice. She always thought it was just an informational mailer. She put it in a drawer every year without really reading it. Last year, a neighbor mentioned something called the Senior Additional Exemption at a church potluck. Dorothy had never heard of it. She went home, looked it up, and found out she had been qualifying for it for years without ever claiming it. She filed in late September after her August trim notice arrived. Her county accepted the late filing. Her assessed value dropped by an additional $50,000. Her annual tax bill went from $1,890 down to $1,230. That is $680 back in her pocket every single year. Dorothy did not get a refund for the years she missed, but she stopped losing that money going forward. And that is exactly what this video is going to help you do. Now, before I get into the details, let me address the two things I already know some of you are thinking. The first one is, this is probably only for people who are really struggling financially. That is not true. This is not just for low-income retirees. The income limit for this exemption is $38,686 for the entire household for the year. That covers a lot of people who would never describe themselves as low income. If your Social Security plus any pension or part-time work stays under that number, you qualify. The second thing I know some of you are thinking is, this is probably only for people with expensive homes or big estates. That is also not true. This is not just for people with big estates. This exemption applies to the home you live in right now, whether its assessed value is $120,000 or $380,000. The exemption reduces what the county taxes you on. It works for ordinary Florida seniors with ordinary Florida homes. This content is for you. Here is the first thing you need to understand. There are two separate property tax exemptions that Florida homeowners over 65 can stack on top of each other, and most people only know about one of them. The one most people know about is the standard Homestead exemption. That one takes $25,000 off your assessed value right off the top, and then another $25,000 off the portion of your value above $50,000. Together, that is $50,000 in exemptions. That is the baseline. But there is a second exemption sitting right underneath that one, and it is called the Senior Additional Exemption. The formal name on the form is the Low-Income Senior Exemption, but do not let that name fool you. The income threshold is $38,686 for the household for the year. This exemption takes off an additional amount, up to another $50,000 off your assessed value, depending on what your county has authorized. Some Florida counties offer the full $50,000. Some offer less, but every dollar of that reduction lowers the taxable value of your home, which lowers your bill. The form for this exemption is the DR 501SC. That is the one we are talking about today. The normal deadline to file the DR 501SC is March 1st. If you missed March 1st of 2026, you are probably assuming you are done until next year. You are not necessarily done yet, and that is the entire point of this video. Here is the second thing you need to understand, and this is the part that most people never hear about. When your trim notice arrives in August, it does more than just show you your proposed tax bill. It opens a legal window. TRIM stands for Truth and Millage. It is the notice the county sends every August that shows your assessment assessed value, your exemptions, and what your tax bill is going to be if nothing changes. The Florida statutes allow a late filing period for certain exemptions after the trim notice is sent. For the DR 501SC, many Florida counties accept late applications for up to 25 days after the trim notice mailing date. That window is not advertised. The county property appraiser is not going to send you a separate letter explaining that you have 25 days to file. Nobody from the county is going to call you and say, hey, by the way, you still have time. You have to know to ask. The trim notices in most Florida counties go out in mid to late August. That means the late filing window in 2026 is going to open in August and close by mid-September in most counties. When your trim notice arrives in your mailbox this August, do not put it in a drawer. That envelope is your clock starting. Here is what you do the day your trim notice arrives. Look at the top of the notice. It will show your assessed value. It will show what exemptions are currently applied to your account. If you do not see the senior additional exemption listed, and you are 65 or older, and your household income is under $38,686, your next move is to call your county property appraiser's office directly. The number is on the trim notice. When they answer, here is exactly what to ask for. You say, I am calling to ask whether your office is accepting late applications for the DR 501SC Senior Additional Exemption within the 25-day trim window. Write that sentence down. Use those exact words. Some clerks will know exactly what you are talking about. Some will put you on hold. Some will transfer you. Keep going until you get a yes or a no from someone who knows the answer. If the answer is yes, ask them to tell you the specific last date they are accepting applications, and ask them whether you file in person, by mail, or online. Get those details before you hang up. Then file immediately. Do not wait for next week. Do not wait to see if there is a better time. File the same week you make that call. The form is the DR 501SC. You can download it from your county property appraiser's website. It asks for your name, property address, confirmation that you are 65 or older as of January 1st of 2026, and your household income for the prior year. You will need to attach proof of income. That means your Social Security award letter, your 1099 forms, your pension statement, whatever shows what came into the household in 2025. Bring copies, not originals. File and get a stamped receipt or a confirmation number. Here is the fourth item, and this is where I want you to pay close attention. If you are not sure whether your county is going to accept the late filing, not every county in Florida has the same policy on late DR 501SC applications. Some counties are strict about the March 1st deadline and will tell you no. If your county tells you the window is closed, do not argue and do not hang up frustrated. Here is what you do instead. Ask the clerk to send you the DR 501SC form and the income documentation checklist by email, or confirm where you download it. Then ask them this exact question. What is the earliest date I can file for the 2027 tax year? In most counties, the answer is going to be, you can file starting in January, but no later than March 1st, 2027. Write that date down. Put it in your phone as a recurring reminder on January 15th, 2027. Because if you file in January instead of scrambling for March, you have time to gather your documents without pressure. The senior additional exemption is not a one-time thing. Once it is on your account and your income stays under $38,686, it renews automatically every year, as long as you file a renewal form when the county requests it. One filing protects you for years. Missing one more March because you forgot about it is $608 a year or more. Walking out the door for no reason. Here is the fifth item, and I told you at the beginning this one is the most important, and the one almost nobody does. Once you have the senior additional exemption on your account, or once you have committed to filing in March of 2027, the next step is to verify that your homestead exemption is also correctly applied, and that your Save Our Homes cap is working the way it is supposed to. The Save Our Homes cap in 2026 is 2.7%. That means the assessed value of your homesteaded property cannot increase by more than 2.7% per year, regardless of what the market does. But this cap only works if your homestead exemption has been on the account without interruption. Some seniors have a gap in their homestead exemption history because of a refinance refinance, an estate issue after a spouse passed, or a mistake the county made. If there is a gap, the cap resets. That means the county can reassess your home at full market value for the year the gap occurred, and your taxable value can jump dramatically. Here is what you do. When you call your county property appraiser about the DR 501SC, also ask them to confirm that your homestead exemption shows as continuous with no gaps, and that your Save Our Homes cap is active. Ask them to read you your assessed value for 2025 and your assessed value for 2026. If the increase is more than 2.7% and you have had homestead continuously, that is an error, and you have the right to file a petition with the Value Adjustment Board. The deadline to petition is also tied to the trim notice, typically within 25 days of the trim mailing. One phone call confirms all of this. Do not leave that call until you have both answers. Let me bring this together for you now. Item 1. There are two property tax exemptions that stack: the standard homestead exemption and the DR 501SC senior additional exemption, and most Florida seniors over 65 are only getting one of them. Item 2. The trim notice that arrives this August opens a late filing window of up to 25 days, and that window is your last chance to reduce your 2026 tax bill this year. Item 3. The day the trim notice arrives, call your county property appraiser. Ask specifically about the DR 501SC late application window and file immediately if they say yes. Item 4. If your county says the window is closed, set a reminder for January 15th, 2027, and file the DR 501SC as early as possible in January so you never miss March again. Item 5. While you have the county on the phone, confirm your homestead exemption is continuous and that your Save Our Homes cap increase this year was no more than 2.7%. One quick note before I close. I am not a tax attorney or a licensed financial advisor. What I share on this channel is based on Florida statutes and publicly available programs. Always confirm the specific rules with your county property appraiser, because deadlines and policies do vary by county. Now here is what I am asking you to do right now. Think of one person you love who is over 65 and owns a home in Florida. Send them this video today, not tomorrow, today. Because if they are missing the DR 501SC and they qualify, that exemption is worth up to $50,000 off their assessed value. In most Florida counties, that translates to somewhere between $600 and $200 a year in real tax savings. That is money they earn back every single year for one phone call and one form. The mission of this channel is simple. The rules exist, the money is there, and too many Florida seniors are losing it because nobody told them. We tell them, share this video, and we will see you in the next one.